Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, weekly stock market analysis show where we understand the market from technical charts and try to learn something from it and the plan for a better trading journey for the next week. And that's starting from tomorrow, July 8th, Monday 2024. So we have a lot of steps lined up. We'll talk about the indices, the options and stocks, and a lot more. So let's dive into the charts first before we come to the conclusion. So here we have the breakout view that's happening. So it's multiple cup and handles and the flank breakouts that has been happening since long. Now we can clearly see that that's happening in the Nifty and the Banknifty. Up more retracement, and market is going higher and higher. Same can be seen in this view as well, right? It is well within the trendline channel, and then the Banknifty is trying to move up and hit the top of the trendline channel. Nifty has done that. And daily also we can see it's moving within a parallel channel, and there was this election volatility that happened, but we can ignore that. Otherwise it's trending up and up. Now coming back to looking at the candlestick alone, you can see that the last candle is once again a bullish weekly candle on the Nifty. Banknifty also, it's a green candle, very volatile, not as bullish as it was last week, but definitely it has made new all-time high, right? And this new all-time high is there for the 7th consecutive week. So it's a post-election pre-budget rally. You can see that's happening. Market is going non-stop. Candlesticks definitely bullish. Volatility can be seen on the Banknifty. Daily candles, if you see, the final candle in Banknifty also is wild reach. It's green. But it had a dip. You can see that it recovered immediately, quickly, beautifully from that small dip also. Nifty, and Banknifty, you can see that it's a small body candle. Looks like a spinning top. Not exactly the very top, but yeah, it's not confirmed to be any bearish as of now. But if you see the 4 days or 5 days of trading days, you can see that it's a inverted V-shaped move that has happened. Market moved up, managed to make highs, and then inverted. While Nifty, if you look at the 5 days, it moved up, and then a small dip that happened for the inversion. That is a good bottom, and it completely recovered. Right? That's the price action on the daily chart. You can clearly see. But Friday's close is green, and it's green on both indices, with small body green on Nifty and a wider body green on Banknifty. But close is flattish close on the Nifty and the Banknifty also that way. Banknifty was bearish actually. Friday close was bearish because after the fall on the Friday, it could not recover full of that, just like Nifty had done that. It's still recovering, if you see. So that way it's bearish for 400 points something. We'll come back to the numbers. So that's about daily candles, and the bulge bands, you can see it's expanding upside. Not exactly working on the bands, but it's an expansion that's seen on the upside, which indicates more further up moves on both the indices of the daily time frame. So that's what bulge bands is showing, bullish bias, more further up moves as the bands are expanding. So let's come back and conclude. So we have a wide range bullish candle weekly. Positive close of 330 points, and it's 46% rally from breakout patterns. Banknifty, we have a third week, right? While it's a 7th week of new highs on the Nifty, Banknifty, it's a third week of all-time highs, and it's a small body close that we've seen, and it's a 318 points, right? Up move that has happened from, and the rallies more or less at the 38% rally from the last 1 year of March 2023 onwards. You see, daily charts is flat close, but it's positive 0.09, 22 points up close, and it's a negative close of 443, and it's less than very close to 1% of long flows happened in the Banknifty. After the fall couldn't recover, Nifty could recover immediately. So it's a spinning top, slightly bearish. candlesticks that way on the daily charts, if you see. So that's about the candlesticks. Now, so basically what has happened is the breakout continues for another week, and it hit new all-time highs on both indices, and it conquered and then sustained the 24k, and market is heated up. It's stellar rally, it's no doubt about that. Momentum trend and all that is picked up. It's back to slightly volatile, and probably this pre-budget rally, and it could fizzle out after a while, or it could reverse after a while. So basically it's consolidating now before making the next move. You can see as of now daily charts, if you see. So market is waiting to react for a major event that's coming. It's a union budget. It's the first union budget after the new government has formed. So all demands we've already seen. So that's a wrap up of the price action and the summary of what has happened in Nifty and the Banknifty indices last week. Let's move ahead and see what are the support resistance levels. So market has taken a small dip from exactly at 24,400 nearby, which is about the 61% 8% of Fibonacci extension. So you have to keep in mind that Fibonacci extension is considering this June month high as a swing high, and then that's how it's not. So any retracements or extensions above the 61.8 is often heated up by the upside or downside. So right now the extension shows that it's heated up, so it's reflecting on this. Once it is going beyond 71, right? It's a breakout, definitely it has to go beyond the 8, but anything above 68 can fizzle out. That's the thing that you have to keep in mind. And the first resistance obviously will be 24,400, which is the all-time high that was created on Thursday. And then after that, it can go as high as 24,850 nearby levels at 78.6 Fibonacci extension levels nearby. Until then, you have the hindrances or the resistance that can be felt at 24,500, 600, 700, 800, likewise. Because it's uncharted territory, that's only way we can project how the market could go moving at all-time high levels. So supports, the first support could be found at 24,000 obviously, because it's a big rounding number, and really close by at 23,750 nearby. You have the 20 exponential moving average, that could be next support. Intraday supports can come in about 24,000 also at 61 Fibonacci retracement levels as well. And once the 23,744 is breached, then we have 23,500 zones, which matches with the 50 Fibonacci extension levels. Support can come in there at 23,500, and then 23,200 is the level where the 50 exponential moving average in confluence with the 23 Fibonacci retracement levels from the all-time highs. So that's a zone where the good support will come in, 23,000 and 23,200, between that zone. So that's a good support zone. If that is breached, it comes to the 100 exponential moving average at 22,628, and then you have supports nearby there as well. And 200 exponential moving average is way down there at 21,600. I don't think it's going to happen in next week unless the market makes big pressure. So the levels that you will watch out for is 23,000. That's a major support zone, even if it retraces much. But we had 24,000 and the 23,500 levels that could act as support, and 23,700 also is a 20 exponential moving average that can be handy support for the Nifty. Moving to the Banknifty, you can see that the first resistance, the retracement has already started in the last 2 days. In daily charts, you can clearly see that it has fallen down, could not recover as much as the Nifty did, and all-time high resistance at 53,357 is going to be first resistance. After that, it can be a big breakout. Here also we can see that the congestion is happening at the 61.8 Fibonacci extension levels, and beyond that close by zone. So market is heated up for sure. Now if it is going, the next level that you have to watch out will be 53,500, and then 54,000 obviously big rounding number. This resistance is not charted to the upside. Downside, the first support major support would come in obviously at 53,000 rounding number, and then 52,000 rounding number, and then 51,642 is where the 20 exponential moving average support is coming, and then that is in confluence with 50 Fibonacci extension levels, and 5162 is where the 50 exponential moving average support is. That's way down there in confluence with 38% Fibonacci extension levels, right? And then 100 EMA is at 48,900, right? Before that we had the 50,000 big rounding number support. So All you have to watch out is 20 exponential moving average zones at 51,642. Big rounding numbers at 53, 55, 51. That's the supports that you can see. Then the 50 exponential moving average worst case near to be 50,000. So 50,000 and 51. Once 50,000, 162 is a very good support zone, just like 23,000 is support on the Nifty. That's the levels of support and resistance for the bank. Actually, let's move ahead. Momentum and the trend indicators. We are using the RSI momentum indicator and trend indicator. We are using ADX. So it's daily and the weekly. The weekly on the left side, daily on the right side. So the Nifty and the Banknifty both. The trend on the side, momentum and the trend. So definitely it's bullish and rising up. Bullish and rising up. Definitely. Just like Banknifty is bullish and falling slightly. That's all. But momentum absolutely bullish. Trend also is bullish, absolutely bullish, except that the Nifty has got some falling trend strength, but it's bullish, definitely. EMI positive. That's it. Trend absolutely bullish. Volatility has crashed down 8.5% last week. It's 12.6 down the low volatility bridging. Remember, we had very heavy crash after the election, 125% up, more than 60% crash. 60, so that is a huge crash that happened now. Markets have settled down with the low volatility regime, but it is near to 10% of crash that has happened once again last week, when the foreign money is coming and market is at the very high. So it's good that the VIX is fallen and crashing and then settling in the low volatility regime, right? The fear factor is less, and I need to implied to realize volatility's different spread is 20%, minus 20% actually, so it's not much in favor of selling still, we can say. But I percentile is also not that great, 51, right? So sellers won't find much premium and not much in favor if you do the volatility study of thanks to abstract, got abstract. Now, open interest analysis, if you see the short covering build up that has happened, if it's bullish in nature. Bank Nifty, or the contrary, it's long unwinding that has happened in the Friday build up. So there's a contradicting price moves and market views that's there between the Nifty and the Bank Nifty, where Bank Nifty for the short term on the Friday is showing weakness. It's bearish. Slightly on the futures high, but it's bullish in the case of Nifty. Same thing is reflected in the PCR also, with a 0.71 bearish PCR on the Bank Nifty and 1 which is bullish in nature with Nifty. It's the PCR in Nifty. And this is for the options July 10th, July 11th. Bank Nifty and Nifty expiries, weekly expiries that's coming on Thursday, Wednesday and Thursdays. Wednesday is a holiday, so this is coming on actually 9th. So it's a mistake there. There's a mistake there, right? So Tuesday, Wednesday is a holiday, so it's a 9th. So that's about open interest. You can see that open interest levels you can see in the charts. Left is Nifty and right side is Bank Nifty. So the highest put writing is seen at 24,000. After that you have 24,200 also, having a good second level of highest put supports, and then resistance is highest is seen at 24,500. So it's a narrow range of just 500 points. 24,800 is where the next level. So this is matching with what we have studied in the technical charts. So open interest is matching with technical charts, means you can have more conviction. But remember, you have 4 days more before the expiry is coming weekly. The Bank Nifty also has got a relatively narrow range of 1,000 points only, where the highest put rating is seen at 52,000 and 53 is where the highest call rating is. The second highest is at 52,500 and 54,000. So options have a very narrow range. It is in sync with what the chart study is showing, and that's a place where you have to put the bets. PCR is contradicting, and futures are high. So open interest is slightly contradicting with respect to futures and the PCR ratio of options. So keep that in mind. Bank Nifty, you have to keep a close watch on Bank Nifty if it is further deteriorating. Last week also it was long unwinding in the case of, it was short build up in the case of Bank Nifty, and Nifty on the other hand was short covering on last week also. So this contradiction will not help, right? And this could have happened in the Bank because of the HDFC Bank that worst after the breakout. So HDFC moves, Bank Nifty moves, Bank Nifty moves, Nifty also moves. That's how it is. Now the sectors, industrial sector analysis if you study, you have a lot of bullishness that has come back, and the IT sector after a very long time has gone into the bullish rising momentum on the both time frames of weekly as well as bull. It is a 4.3% breakout, big wide range candle. That's what we can see in the range from Banknifty. So IT sector is bullish as well. We can confidently take long positions because both time frames momentum is picked up. Metal also moved up 1.7%. In fact, all of the sectors moved up last week. Every sector, every major sector that's in our scanner basically. Metal moved, IT moved, auto sector, pharma, FMCG, reality also moved up. And the biggest move happened in the pharma sector, 3.5%, and the IT sector, which are considered to be defensive stocks basically, and that's lagging behind since a long time. 4.3% IT up. Now, metal is still having sideways rising momentum in the case of daily, so we'll have to wait for long questions for that. Otherwise, bullish momentum is still there in the medium term. Auto sector has been bullish, could take long positions, and just for the mode of pharma also bullish, could take long positions. FMCG also bullish, could take positions. So reality is still sideways flattish. So reality and metal are the only two sectors that's remaining to join the rally. Otherwise, everything is fine. Sectorial momentum and the 20 decade is showing improvement, and the big breakout is happening in the case of IT and the pharma. Look at IT. Big bird or cup and handle momentum rising up in the bull zones after a long line, but there is a divergence, negative divergence, bearish divergence is there in the weekly early process about that, and that's cleared. But looks like a momentum breakout, cup and handle. Pharma also breakout from all-time highs. Flag breakout is what you're seeing there. Momentum bullish and settling down at the RSI 60 above, and trend also close over the bull zones. Now metal also, if you see, it's heated up, consolidating. Momentum is still bullish. Auto at the all-time highs, heated up, it's bullish. FMCG heated up, consolidation over, breakout is happening, heated up, momentum rising. Everything looks fine. Reality index also heated up at the top, but yeah, so reality and the metal are the two sectors which are still not ready to take long positions because of the fact that both time frames are not bullish enough. Now we're trying to study the heavyweight stocks, few heavyweight, the critic stocks, the 4 or 5 stocks that contribute maximum to the indices, beginning with HDFC. HDFC was supposed to have broken out and it made a new high after the all-time highs. It has gone as close as 1,800, but then it reversed and formed an inverted hammer to the making all of this investors, long-term investors, short-term investors, breakout traders, momentum traders, everyone unhappy, very unhappy. But it is just profit booking is what I would believe. The breakout could still happen if the price moves about this week's can high, but because the momentum is still intact, although it has dipped, weekly momentum is it's fine, quite fine. As long as that does not fall back in the sideways, things should be fine. But if that gets confirmed with further downfall, then you can find support at 1,500, 460 that zones where the trend line is coming. The trace may happen till there, and then it will once again try to break out that. But it was a very, very disappointing profit booking or reversal that is seen as of from the weekly candle with the momentum still holding up there. Yeah. So Reliance is actually breaking out from the flag towards the top of the 10-minute channel. Long way to go. We can go another 5 points easily, maybe more than that as well, because momentum is once again rising up. Trend is also close all bull zones. Chart patterns looks breakout. But the thing is, there is a momentum divergence that is saying, and the value is clear, very cautious. As is the bank at the top, completed met the target of the breakout zone. If it further moves up from here, it will be a big mega breakout because momentum is rising, trend is rising, patterns have hit the top. Slight question has been here because it's the top of the trend line channel. But we have the 3 big contributors to the index: the HDFC Bank, Reliance, and HDFC, and the ICICI Bank. 3 big contributors. Absolute bullishness is seen there. That's just because FIs are buying. We'll see that in the next slides. We'll focus in the trade because TCS also, when the IT is picked up, that is also going up, and green white range bullish candles are seen. Momentum just trying to climb with the medium term bullishness. Trend is already closed over, and all eyes would be if this breakout would happen on the IT or not, right? Because it's a flag pattern, it's a parallel channel. It's seen on both TCS and if the clients in the bull zones, definitely that breakout happen, and if that happens, as much as height of this parallel channel, that could be a big move around 500 points or more. That can easily happen in the case of infosys. Right, so eyes will be done. IT is finally recovering. And coming to comeback buying, it is consolidating. That is also formed a green candle, which sideways as of now, just trying to climb up. But it is a contrast stock that has been consolidating forever. So that's contributing with index and holding it, but don't expect miracles from there or breakouts from that stock. ITC is also on the top of the flag once again, getting ready to break out. If that happens, it will be good, but as of now, it's sideways. So all this four is sideways, right? And these three are the contributors. That's where the fire money is coming in. That's where the stocks, that's heavyweight stocks that's driving the market also. Others are also catching up. And mid-cap index heated up at all-time high. Broader market indexes, small cap, all-time highs, absolute bullish momentum and heavily heated up. So it's buying, all from the retail money. Institutional participation, if you study, you can clearly see that the FIs have turned out to be heavy buyers of 7,000 crores after a long time, consecutively for the second week. And domestic institutions, after a very long time, have turned to be sellers. Can you believe that? They have been buying, tired of buying. Now they are booking the profit when the FIs so come into the market. They've been supporting when the FIs are selling, and now they are making money by selling. That's everybody's happy. So net longs on the derivatives of the past days also have moved up, if you see. That's institutional participation. That's turning green from the FI side, which is good. Now coming to the global markets, that's the US markets, the commodities and the currencies and all that, will give a better picture of what's happening around the world. So dollar has moved right 1% down nearby. And it's 104.6. No, falling down is good. Right? And it's sideways and it's falling down now. But the USD and the currency pair of the rupee has not gained much. It's risen up 0.17% and it's at 83.48. What good? Although it's not directly correlated, even when the dollar has risen up last week, rupee remains weak. Now the trouble is that crude oil also is spiking up and then it's moved 2.5% nearby. Look at where it is. Anytime it can do a breakout move towards 93 or the resistance is there. So this is a flag pattern, this is a parallel channel, and breakout from here could be dangerous for an oil body country like ours. But thank God it's still at sideways rising and not bullish rising. So as long as that sideways rising breakout from this RSI 60 above it does not happen, things should be fine. But gold, once again rising up, making big white red candle. There is divergence in the momentum there, but momentum is absolutely bullish as of now. It's a flag breakout that can happen and new all-time highs could come in. When the gold is rising up and the equity market is at the peaks, you have to be cautious. Yeah. Global markets, US markets, Dow Jones, all are close green. Dow Jones green, but it's consolidating basically very close to the all-time highs. Nasdaq breaking out all-time highs and wide range bullish candle. S&P 500, which is Nifty of US, is also breaking out an all-time highs and wide range bullish candle. Momentum is into getting them into the overall. If you see, momentum is rising up and then getting at the bull zones. There's a divergence there in the momentum. Something that you have to keep in mind. And I was seeing the Dow Jones as well as the S&P 500. But green US close is always good for our markets. But it's very close to the all-time high. You have to be cautious about that fact as well. The two stock picks for the next week. Biocon, pharma sector is breaking out. Obviously, then Biocon has been breaking out and has made 25-30% move from the parallel channel low, the parallel channel top, and then further pulls can happen. Resistance could be found at 40. So this is good risk-reward trade. 400 could have good resistance. It may be slow moving, but trail and then more. Tight stop losses. And in fact, why this is chosen is big volumes, big momentum, and big trend. And price patterns breaking out. The Federal Bank is also seeing a parallel channel breakout, clearly seen with a wide red bullish candle, big volumes, momentum, and the trend absolutely rising up in the bull zones. Two stock picks for next week. Now, the payoff chart for the bear call calendar spread is what it is. So when do we use this? So my view basically is that the market is heated up. So I know the market may further get heated up and then move further up, but overall I have some bearish view. Although I know I may go wrong. So the situation is where you take bear call spreads, where you sell a higher OTM, 24,500 put, and then you sell a lower or the at the money ATM, not higher OTM, and a ATM selling will happen. So that way you will have minimal losses if the market reverses, because you think that the market could reverse, but you're not sure, right? And in addition to that, in order to get the premiums and have improved the risk reward, I had bought next to next week, not immediately next week, so that I get some premiums. That way I get some larger range, better premiums, and then probability is not that great, but it's okay as long as you don't follow to the last week. So margin requirement is less. It's completely risk defined. You know what exactly you will lose per lot. So increase your lot size as per your capital size and risk appetite. Right? It's up to you. So this is only litigation purpose, and this is a payoff of Nifty options weekly chart, weekly strategy that you're seeing there, which is known as bear call current spread. Reasons for taking that, all explained. Right? You can explore this and study this in Upstream if you want. Now, coming to the wrap up. So it's more or less like last week. Both indices are broken out, and it's an all-time high for the consecutive 7th time Nifty, and third week for the Banknifty. 24,000 and is clearly conquering and sustaining that. That's the main thing. And 20 EMA is still strong as a support there. Remember, we are in a 10 to 11% retracement only that has happened in the election volatility, and it's a 38% to 45% plus kind of rally that has happened in the last 1 year or so. From the March 2023, that's what is happening. Let's try to bucket the different parameters that is in favor of the bulls and bears. For the bulls, a lot of things in there support as well. Momentum and the trend indicators both have absolutely in the bull zones. Price actions above the 20 expansion moving average. India, which is falling further, and it's the low volatility regime. Fear index is settled down after the election. Multi banks are showing 6 upside expansion. No sectors and the heavyweight stocks are all in the bull zones and rising up. Most of them are in the bull zones, except a few which is catching up. And mid cap and small caps are all-time highs. FI money is coming in. They have been buyers for 2 weeks consecutively. Right? US markets are green. What more we need? And if you look at the open interest, you can see that the short covering futures build-up is seen on the Nifty, and the bullish PCR is what we can find there. Now, a few factors are there for the bears. Fact is that it's a Fibonacci extension 61.8 that has hit. Market has heated up for sure. It is heading towards a 78% Fibonacci extension. So let's be cautious. Definitely, the market could reverse, will reverse. That's going to happen anytime when we least expect it. So be cautious about that. Up to the top of the trendline channel. So obviously the price pattern also says that. Nifty is showing some long and winding build up. It's slightly weaker last week and previous week as well. And PCR also is bearish in the option for the last 2 weeks. Now, and yeah, what I have to say is the same that what I said last week. Okay, let's once again broken out and made all-time highs consecutively. It's heated up, it's at the peak, and it just had its stellar rally in the moment of the trend, which is like that, it's picked up. Market is volatile, and this volatility and this breakout is happening just because of a rally that is ahead of the pre-budget, anticipating something. Now, things will not remain the same after the budgets. Things may change before the budget also. Just few days before the budget or immediately outcome of the budget also things may change. Already may suddenly spike up because of the speculative nature of major events and things could change. So be aware of that pattern and play cautious. That's all it tells me. No, technically the charts are heated up and sustains the up move and is gaining momentum and the trend both. So market view for me is bearish, however, right? Mild bearish, not really bearish. I'm gonna go further up, but no, I know that the correction is coming. That's why I am saying that, right? So, maximum events can come in time. That's how beyond the technical analysis. If that comes in, on the chart analysis in the for a toss, that can come in because of many lower factors. Last to down as how we have seen the last several days. The 23,000 and 24,500 for the Nifty is what levels I look for next week. 51,000 and 53,500 is the range that I look for the next week. And as long as this 23,000 and 50,000 is maintained, we still have the hope for some consolidation and a further breakout for the next leg that could happen. But some retracement definitely has to come in, no matter what right now. So always hedge your positions at the portfolio level as well as at the trade or position level. So it's both. Always have hedging that can be used for protecting your capital. Also, you can make money also by rental strategies that say will in the playlist about that. No, with options you can get regular income as well as you can protect the portfolios. Both ways you can do that. How? Check out the playlist. That's all I have. If you like the content, subscribe and share and like and put in comments and feedback and all that. I'm also active in all the channels below. If you like to subscribe that also, you can do that. Thanks for watching. Happy trading, happy building, happy investing. Bye bye.